Hello traders, and welcome to a new day trading strategy of mine. So in today's video, we'll be looking at a technical analysis and a volume analysis way that we can trade altcoins with really any market cap. We're also going to look at how to screen altcoins, and then after screening them, to look how to get into them and how to get out of them. The reason I'm doing this video is because it was requested on my Patreon to do a video on technical analysis and another technical analysis strategy video. And judging that I've never talked about altcoins before, I think that this would be a good way to go into it. All right, let's begin. So the first thing that I'm going to talk about is the screening strategy. So there are two metrics that I like to look for when I'm looking through lots of charts of various assets. I want to look for two things. One, a coin that just retraced after a powerful move upward. So what that means is when we have a consolidation period and then price just breaks out very quickly and then begins to come down very slowly, typically that's a very bullish pattern and price likes to continue going upward the majority of the time. Another even better way to find one is price trading at support. So what I mean by that is when price slowly comes down to support or consolidates at support, that's when we want to buy. We do not want to buy into the market when price crashes down to support with high momentum, because typically what that means is you get a continuation of the downtrend and you get a breakdown of price. So with very high volume and very high momentum moves to a support level, you might see a bit of support trying to hold and then that falls through. But what we're going to see is more like slow decline and you hit support and then it kind of just consolidates and chills out for a bit. All right, so without further ado, let's look at some charts for these two metrics. Okay, and just one thing, these are the parameters that you can put on. I like to put the daily on because we're going to be day trading and talking about day trading and scalping strategies that we can use today. And then secondly, this green that you see on the chart is price in USD, so that's price of altcoin by dollar. The gold or yellow is price by Bitcoin. I like to look at price by USD because that's how I trade. But if you trade by Bitcoin, then just focus on the gold or yellow or maize. Yeah, so looking here, it seems that Ripple seems to be trading at support. It seems like we have a support level here, a bit of an inverse head and shoulders going on here with just a bit of consolidation slightly downward here. So I'm going to click on Ripple because this is fitting my metrics for screening a coin. Now let's just look into Ripple and see what we can find. The first thing that you should be doing is going on the daily. I like to do candlesticks and price it in dollar. You can price it in Bitcoin, like I said. And then you want to put on the volume profile, found right there. And yeah, let's get started about the volume profile and how to day trade with it, because it is a really interesting and very helpful tool that can give you an edge over many other traders. All right, let's talk about what is the volume profile and how can we use it. So the volume profile is a volume metric that rests on the y-axis instead of the standard on the x-axis. And what this gives us is something called volume by price. This is volume by time. And the great advantage of having volume by price is that we can see how much volume occurs at certain levels without having to do the guesswork or addition of support levels. So what we can say here is that if we just look at this bar right here, we call them nodes, but this node right here, what this represents in this space is how far to the left it is how much volume it has. So of course, the farther to the left, the higher the volume has. And it shows all volume traded during that bar here. So as you can see here, there's a lot of volume traded around that market top of this consolidation period that also formed resistance. And then also some after a stopping point. And then also some back here based on a accumulation stage to an uptrend. So we have a lot of volume around here. And the way I like to use volume profile is two ways. And I labeled them here, the two different metrics that we're going to be talking about today. So there are high volume and low volume spots. And then we're also going to be talking about distributions. So the first thing that I need to talk about is an HVN and an LVN. So an HVN is also known as a high volume node. And a high volume node is a spot where we have a lot of volume at one particular price point. A low volume node is just a spot where we have not much volume at a particular price point. Like right here at support, we really don't have a lot. Right here, we do have a large amount of volume. And the basic strategy of looking at high volume nodes versus low volume nodes is that we want to buy at LVNs and sell at HVNs. And the reasoning behind this is relatively simple. We can say that volume and price have been basically accepted that volume at this point has been accepted because there's been a very high volume here, but volume has not been accepted here, meaning that a large move is probably about to take place. The second thing, and the most important, is that with a very high volume price level, what that tells me is that many bulls and bears are entering positions. And if you know volume analysis, you would know that when price comes up to a level where many people have entered, typically you're going to see consolidation or a sell-off. So like this, and you get that V formation, or you might just see some consolidation as price can't really decide where to go. You want to know why that consolidation happens? Well, when you have many buyers and many sellers, many shorts and many longs at a particular price point, what's going to happen? Well, when price comes up and all the longs see price coming up, they're going to freak out, and then they are going to, When many of the shorts see price come up after they short here, they're currently in profit. So when they see price begin to come up, they're going to want to buy back their positions, also known as covering, and getting out of their short positions. At the same time, many longs who were previously at a loss, what they're going to do is when price comes up to them, they're going to sell at a slight profit or at break even. Reason I say this is because basically all humans are risk averse. Studies have shown that people people dislike losses more than they like gains, if that makes sense. So we can interpret this in the market that when the market goes upward and we get to this HVN spot, that many buyers are going to want to get out of the market because then they can eliminate that pain of having a loss. Instead of waiting for the market to continue going upward and have a potential gain, they want to prevent themselves from taking a loss. So that's going to cause some consolidation as many bulls and bears are exiting and entering because of this high volume spot. And that's why we want to target that level, because we know that when price hits that level, that there might be more uncertainty, there might be some consolidation where we can actually get maybe even a better price, and then there also might be a sell-off like that, the V formation. Yes, that's the reason why we want to take profit or sell at a HVN. And we can also see that this HVN looks like it's acting as resistance as well, which is good. The reasoning that we might want to buy in an LVN is that price hasn't been accepted yet. So a ton of volume hasn't come into this area yet, which is telling me that there's large profit potential if you want to become one of the first buyers. With any market, really, you always want to become one of the first in a trend, the first buyer in a trend, or the first seller in a downtrend, because then you can get the best price. So this would be a great spot to buy low and sell high, because you'd be buying at a spot where not many people have bought yet, and you could sell at a spot where many people have positions. And the reason that I say this before we go on to the second example and second strategy is that price tends to gravitate towards HVNs and gravitate away from LVNs. So what do I mean by that? Price likes to go to spots of very high volume because that's where many positions are located. And price doesn't really like to spend a lot of time at low volume nodes, and that makes sense. Not much is really going on at that price point. So either demand's too high or supply's too high. And that's why we want to target levels, especially LVNs, and then we want to buy at those levels and then target an HVN because we know that price naturally gravitates towards HVNs. Okay, so that's a lot of theory, but also a great strategy that you can use just by looking at the high volume points and the low volume points. Let's get into our second strategy, which is the distribution within each node of the buying and selling. So let's look here just for maybe a coin that I would potentially want to get in on. Okay, Monero. This is potential because this is a large, fast up move with some retracement. So when I see this is telling me that this looks decent for a buy. But, I mean, that's just basic metrics. Okay, so this is actually a decent example. What I see here, Before we talk about our second strategy, I do see some great low volume nodes down here. So if price comes down to here, we might get a bounce, then back up to this level right here, because this seems to be good resistance. The second strategy that I'm talking about is the distribution within each node. How much buying and selling is occurring within that node. So typically resistance will form when you have a lot of buyers at a high price level. So if this isn't the greatest example, actually up here I take that back as a really good example. Down here it's not. When we have a price level that's it has to be very, very high like this for it to have enough sway in the market. And B, when we have a lot of buyers at a level but not many sellers, what's going to happen when price comes up? Well, those buyers are currently at a loss. So when price comes up, they want to get out at break even. And if they want to get out at break even, that's going to cause price to make that V formation, hits their levels, and then immediately dips down. So that would be forming good resistance. So what I would do in plotting and looking at analysis, just by looking at our second strategy with distributions, I would say that this area looks to be very strong resistance, meaning that for those who know resistance, if price is to come up to this level, I'm probably going to see either a reversal or a short-term retracement. The same is said with the support level. Typically at a support level, you're going to see a lot of shorts and a lot of selling that happened. So we can see right here, you can see here that a lot of selling, especially talking about this guy right here, a lot of selling occurred here. So if price does come down here, maybe, potentially, many of those shorts who had open positions who are now unprofitable are going to buy back those positions, which is going to put a lot of buy volume into the market and could potentially cause price to move higher. Okay, so that's just a quick two-part strategy where you can look to screen altcoins just by looking at some charts on the daily, and then you can actually go a step further and look how to day trade them using the volume profile. Again, I would always advocate you put a stop loss below your buy. You typically want to put a stop loss below an important support level. The reasoning being that if price does hit your stop loss, it'll probably go even lower because it broke support. Take profits should go at HVNs, and LVNs are going to be where you want to enter positions because you know that price doesn't like to spend a lot of time at LVNs, and it does like to spend a lot of time at HVNs. So that is going to be it for day trading altcoins with the volume profile. I hope you enjoyed this video, and if you guys have any questions or concerns about any part of it or additional strategies, then feel free to leave a comment. But thanks for watching.